Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 2nd of October. I'm Daniel Lam, your host for the podcast. The Hang Seng Index once again broke above the key psychological level at 27,000 today. We spoke about the increase in the total factor productivity in our podcast last week. Now, the growth model is changing in China, moving from the capital intensive to the higher end, or the technologically driven way of growth. Jensen Huang, NVIDIA CEO, commented that China is nanoseconds behind the US regarding Chinese progress in chip making and its manufacturing potential. He pointed to the country's deep pool of talent and internal competition across its provinces, which leads to progress. That really speaks volumes about the positive momentum on the technological side of things in China. So we are staying bullish on Chinese equities, especially the tech area. So we have an opportunistic idea on the Hang Seng Technology Index. We would be buying on pullbacks with Hang Seng Index at 25,800, a great support level to be adding to Chinese equities. Now, this is October and is always a crucial month on the policy front. The top officials will be discussing the next 5-year plan between October 20th to the 23rd. Now, to this front, the macro data, especially the more recent ones, will be put under heavy scrutiny. Now, Chinese official manufacturing PMI edged up to 49.8 in September on robust production activity. So on average, the headline PMI inched up 0.1 point to 49.5 in the third quarter, with the production PMI rising 0.6 points from the second quarter. Now, the highlight of this is that the new export orders PMI jumped 0.7 points, and the service business activity remains solid as the corresponding PMI rose 0.1 points to 50.2 in the third quarter. Now, services and consumption, especially the lighter item consumption, such as traveling, are key areas that the government encourages. There's much room for that side of the economy to expand, especially compared to the developed markets. So they are taking the baton from capital-intensive growth. Also, the resilience in export, despite the US tariff, is another critical element that can help the GDP figure to grow. And the next GDP figure is going to be released on the 20th of October. That is all from me for today. As always, if you enjoy these podcasts, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.